The mutual fund business in Canada plays a vital role in helping investors grow their wealth while diversifying across sectors. With so many mutual funds available, understanding the largest ones can help you make investment decisions. These funds are well known for their performance, stability, and long-standing investor trust. In this video, we'll look at some of the largest mutual funds in Canada and what sets them apart. 1. RBC Canadian Equity Fund. The RBC Canadian Equity Fund is one of the country's largest mutual funds. RBC Global Asset Management manages it, primarily focusing on Canadian stocks, particularly large-cap businesses. The fund contains well-known banking, energy, and telecommunications companies like Royal Bank of Canada and Enbridge. This fund is geared for long-term growth, making it appropriate for investors seeking exposure to Canada's leading companies. Its focus on large, established enterprises provides stability, even in tumultuous markets. 2. TD Canadian Bond Fund. The TD Canadian Bond Fund is a top fixed-income mutual fund. It invests in high-quality Canadian government and business bonds, providing a lower-risk option for investors looking for consistent income. This fund attempts to provide stability, making it appealing to conservative investors, retirees, and those wishing to supplement a more aggressive portfolio with a secure investment. The TD Canadian Bond Fund appeals to investors who value safety and consistent returns, even if the growth rate is less than that of stock funds. 3. BMO Monthly Income Fund. The BMO Monthly Income Fund is popular among income-seeking investors. It invests in Canadian equities and fixed-income securities to generate monthly dividends. This fund provides income and moderate growth, making it an excellent choice for retirees or anybody seeking passive income. This fund's balanced approach makes it less volatile than pure equity funds while providing growth potential through its equity component. 4. Scotiabank Canadian Growth Fund. The Scotiabank Canadian Growth Fund focuses on firms with great growth prospects. It typically invests in Canadian businesses that are technology, finance, and energy leaders. The fund's goal is to provide long-term wealth appreciation. This product suits investors with a higher risk tolerance who seek long-term growth. The fund's growth-oriented orientation makes it more volatile, but it has higher potential returns over time. 5. CIBC Dividend Growth Fund. The CIBC Dividend Growth Fund focuses on dividend-paying firms. It invests in Canadian companies with a track record of solid earnings and predictable dividend payouts. This investment pays out dividends regularly and has the potential to grow in value. Dividend funds are an excellent choice for people seeking passive income, and the CIBC Dividend Growth Fund provides an opportunity to profit from the stability of established Canadian companies. 6. Fidelity Canadian Balanced Fund. The Fidelity Canadian Balanced Fund is a popular alternative for investors seeking a combination of equities and bonds. This portfolio balances growth and income by investing in Canadian stocks and fixed-income securities. It is intended to generate both capital appreciation and regular income. This balanced strategy makes the fund appropriate for various investors, particularly those seeking moderate growth, without taking excessive risk. 7. Mackenzie Canadian Growth Fund. The Mackenzie Canadian Growth Fund focuses on high-growth Canadian businesses. It aims to generate long-term capital appreciation by investing in companies with high growth potential in the technology, healthcare, and finance sectors. This fund is appropriate for investors who can tolerate more volatility and are willing to wait for long-term growth. It's an enticing alternative for investors looking for long-term returns. 8. Manulife Strategic Income Fund. This hybrid fund invests in Canadian and international bonds. It tries to combine income with capital preservation. This portfolio is intended for investors seeking stable returns with some exposure to international markets. Its domestic and overseas bonds mix makes it an excellent choice for investors looking to diversify their fixed income portfolios beyond Canada. 9. TD Dividend Income Fund. The TD Dividend Income Fund focuses on producing income from dividend-paying stocks. It invests in high-quality Canadian firms with a record of paying dividends, such as large banks and utility companies. This fund is a fantastic alternative for income investors who wish to profit from dividends and long-term capital growth. 10. RBC Global Balanced Fund. The RBC Global Balanced Fund invests in equities and bonds, providing exposure to Canadian and overseas markets. This fund seeks consistent growth and income, making it an excellent choice for long-term investors seeking a diverse portfolio. With exposure to both domestic and global markets, this product enables investors to capitalize on global growth prospects while retaining stability through its bond portfolio. To summarize, these are some of the largest mutual funds in Canada, with a wide range of investing alternatives based on your financial objectives. Whether you want long-term growth, consistent income, or a well-diversified portfolio, there is a fund to meet your goals. Investing in mutual funds is an easy method to diversify your portfolio and take advantage of the expertise of professional fund managers. If you enjoyed this video, please like it and subscribe to our channel.